Welcome to Charts Chatter with Chatur Charts. In the 11th May session, we had noted that Nifty had formed a inverted head and shoulder pattern with a likely target of about 150 points to retest close to 16,300 today, that is on 12th of May. But no sooner than the market opened, in fact, in the pre-open itself, it opened with a deep cut owing to the news flow overnight that RBI was planning to even consider some hike in interest rates in the June 2022 meeting. So, which is about 2 to 3 weeks away. So, this news completely rattled the markets and it opened the gap down. And instead of a probable attempt to move up, Nifty opened with a gap down. And thereafter, Nifty lost heavily during the day and made a very bad close. If you look at the daily charts, Nifty has plunged even below the trend line resistance channel that it was always moving in the last few weeks. So if Nifty doesn't hold, 15,800 happens to be a strong support zone for Nifty. This is exactly where on 7th of March, Nifty took support and made a reattempt towards 18,400 levels before this round of correction started. So if 15,800 holds, then probably Nifty will make a attempt back to claw to 16,000 and then levels ahead. But if it doesn't, Nifty will uh, again perhaps retest the January to June 2021 range, that is 15,400 to 15,500, after which it actually started the rally towards its life high of 18,600. So it's actually standing at very crucial support zone. And even if it manages to claw back, Nifty will have to retrace to a minimum of 16,200 for some sort of a rally to happen. Otherwise, I'm expecting weakness in the indices and in the overall market, and any attempt to move higher may get sold into. Primarily because if you see that we had remarked that the cross of death had occurred much earlier in the first week of April, where the 50-day moving average plunged below the 200-day moving average. So right now, the order in which the moving averages have to appear are completely inverted. The 15-day moving average has the blue line that you see here is the 50-day moving average. The brown line that you see is the 100-day moving average. And the pink line that you see is the 200-day moving average. The order should be exactly the reverse, where 50 has to be on the top, followed by 100, and then followed by 200. So the indices are very weak. Coming to Bank Nifty had shown a lot of promise in the last few sessions, but the RBI proposed rate hike discussion or even the agenda item rattled it completely. So after making three valiant attempts to move out of the rising channel, um, Bank Nifty completely gave up its gains to cut to close almost 1,200 points, and it has taken support at the falling channel support line, which also coincides with a long-term support line. So similar to Nifty, Bank Nifty also on 7th of March tested a low of 32,155. But right now it's at 35,500 levels, 33,000, I'm sorry, 33,500 levels. So which is still about 1,200 points to 1,300 points away. So if this support doesn't hold, perhaps Bank Nifty might also test a low of 32,000 level, and after which again it will be taken back to the January to 2021 to February of 2021 lows, from where the rally towards 41,000 had started. So indices have gone weak. Similar to Nifty, the moving averages are also completely out of sync in case of Bank Nifty. So very tough times ahead, and I expect market weakness to continue and rallies to get sold into, unless Bank Nifty crosses 34,600 successfully, followed by 35,400. The weakness in Bank Nifty might also continue considering today's engulfing bearish candle. We now move to the stock of the day. The stock of the day that we are discussing today is Tata Motors. And Tata Motors has actually fallen off from a very, very long-term rising channel, and it has plunged way below the point from where the rally had started. So the next round of supports is identical to Nifty and Bank Nifty. The 50-day moving average, the blue line that you see here, is almost precariously close to the 200-day moving average. So the 50-day moving average, if it cuts into the 200-day moving average, there's more trouble ahead for the Tata Motors stock, and it may perhaps plunge to the low of almost 300 from where the rally had actually started before it made a life high in early part of this year. So most of these stocks that we analyze may kind of show up this kind of tendency. So we need to play with complete caution and trade with complete caution in the markets. As stated, this video is purely for educational purposes and does not purport to be a trade recommendation. In case you do like this video, please press the like button. And for regular updates, please subscribe to the channel by pressing the bell icon. Thank you so much and have a great day. Bye-bye.